Hi. Let's learn about the mortgage interest deduction. The mortgage interest deduction is a common itemized deduction that allows homeowners to deduct the interest they pay on any loan used to build, purchase, or make improvements upon their residence, from taxable income. The mortgage interest deduction can also be taken on loans for second homes and vacation residences with certain limitations. The amount of deductible mortgage interest is reported each year by the mortgage company on Form 1098. This deduction is offered as an incentive for homeowners. Introduced along with the income tax in 1913, the mortgage interest tax deduction has since become the favorite tax deduction for millions of U.S. homeowners. Home mortgage interest is reported on Schedule A of the 1040 tax form. The mortgage interest paid on rental properties is also deductible, but this is reported on Schedule E. Home mortgage interest is quite often the single itemized deduction that allows many taxpayers to itemize. Without this deduction, the remaining itemized deductions would not exceed the standard deduction. Interest from home equity loans also qualifies as home mortgage interest. The Tax Cuts and Jobs Act passed in 2017 changed the deduction. It reduced the maximum mortgage principal eligible for the deductible interest to $750,000 for new loans. However, it also nearly doubled standard deductions, making it unnecessary for many taxpayers to itemize. As a result, most went on to forego the use of the mortgage interest tax deduction entirely. For the first year following the implementation of the TCJA, an estimated 135.2 million taxpayers were expected to opt for the standard deduction. By comparison, in 2022, 18.5 million were expected to itemize, and, of those, 14.2 million would claim the mortgage interest deduction. In 2017, the Tax Cuts and Jobs Act limited how much interest homeowners could deduct from taxes. Instead of single or married filing jointly taxpayers deducting mortgage interest on the first $1 million of their mortgage, they can now only deduct interest on the first $750,000 of their mortgage. However, some homeowners can deduct the entirety of their mortgage interest paid, as long as they meet certain requirements. The amount allowed for the deduction is reliant upon the date of the mortgage, the amount of the mortgage, and how the proceeds of that mortgage are used. As long as the homeowner's mortgage matches the following criteria throughout the year, all mortgage interest can be deducted. Legacy debt, meaning mortgages taken out by a date set by the Internal Revenue Service, IRS, qualifies for the deduction. Mortgages issued before October 13, 1987, have no limits. This means that taxpayers can deduct any mortgage interest amount from taxes. Mortgages issued between October 13, 1987, and December 16, 2017, and homes sold before April 1, 2018, can deduct mortgage interest on the first $1 million of their mortgage. Under the Tax Cuts and Jobs Act of 2017, the mortgage limits for the mortgage interest deduction have decreased. In addition to the mortgage interest deduction change, what can be included as an itemized deduction has changed, disallowing many from claiming what they previously claimed. Despite these changes, the mortgage interest deduction can still prove valuable for some taxpayers. Homeowners that itemize taxes and meet the qualification for deducting mortgage interest can deduct property taxes and mortgage interest from their taxes. Co-owners of a property can deduct mortgage interest to the extent that they own the home. For example, if two people own the house equally, each can deduct up to 50% of the mortgage interest from taxes, subject to mortgage interest deduction limits. The mortgage interest deduction can be taken after refinancing a home if the refinance is on a primary or secondary residence. The mortgage interest can be deducted if the money was used for a capital home improvement, an improvement that increases the value of the home. Here are 5 key takeaways. 1. The mortgage interest deduction helps homeowners lower the amount of tax owed. 2. These deductions are reported on Form 1098 and Schedule A or Schedule E, depending on the type of deduction. 3. The Tax Cuts and Jobs Act, TCJA, of 2017 reduced the maximum mortgage principal eligible for the interest deduction to $750,000, from $1 million. 4. Some homeowners, under legacy clauses, are not subject to the new limits. 5. many taxpayers forego claiming the mortgage interest deduction in favor of the larger standard deduction. Hope this would help. Thanks for watching.